Hi, Tom Middleton from MarketWatch in New York. Today we're speaking with John Legere, CEO of Global Crossing Limited. John, thanks for joining us.
Great to be here, Tom.
Well, let's cap it off. You guys released some results today. Why don't you run down it for us?
I'd love to. We released a lot of things today, and it's important, and we're going to spend a half day with Wall Street tomorrow because what we gave them is a lot of missing pieces. We've started a transformation of our company late in Q4, and what we gave today were the Q4 numbers, annual numbers, importantly, '05 guidance, very discreetly focused in areas where we're going to grow, maintain profitability, or exit. And we gave the clear message that with the financing that we did at the end of last year, we're fully funded to the point in the first half of '06 when we're going to be EBITDA positive, second half cash flow positive. Here's how we're going to do it. And we clearly placed our bet on global IP services to enterprise customers. That's what people have been waiting to hear. How are you going to do it, when you're going to do it, and show me the cash. And there's a lot of stuff to go through.
Okay. But in the fourth quarter, you guys were not profitable. What happened there?
Well, actually, the Q4 numbers were a great proof point because I could point exactly to the implementation of what is built, the '05 plan is built on. Let me give you a few numbers. Q4, year on year from Q4 of '03, we had a 16% revenue decline. That's why I'm having the meeting tomorrow, because people saw me saying it positively. It is positive. Here's why. In our global IP enterprise space, we grew 8% year on year. In a time, we had a little difficulty last year. What also happened? We had 36 points of gross margin, which is up from 29 points the prior year. More importantly, with 16% less revenue, we had more gross margin dollars, 13% more gross margin, higher EBITDA, adjusted EBITDA year on year, 131%. And it's because of the significant pricing action in the global wholesale voice business. And then, what did I announce today? Perfect timing. A $100 million, 7-year deal to the British Council to provide IP, global IP managed services to 7,000 people, 260 cities and 110 locations. That was a great proof point. And I think altogether, I think people are starting to understand where Global Crossing is going and how.
Okay, well, we see the direction now and where you guys are headed and your strategic plans. Let's talk about the wholesale business, though. I mean, how is it viable in the long term?
Yeah, the wholesale business in the United States, North America in general, had some very aggressive, if not irrational, pricing last year. Now, importantly, with our 500-city, 50-country global IP MPLS-based network, we built it and designed it to sell enterprise services to IP service enterprise customers. Now, importantly, what we've started to do is we will use excess capacity in the wholesale voice business if it's profitable. But we're no longer going to chase top-line revenue. We took 1,000 pricing actions in Q4, and in the short term, if a customer is going to be profitable for us, we'll keep them. If not, they can move on. And I think pieces of the industry are going, especially switchless resellers, are in a little bit of trouble. Interesting to watch how the market reacts. I don't think we're the only one thinking about getting more rational pricing in the wholesale space, but it's really just use of excess capacity for us.
Well, certainly. I mean, but the margins are fairly low. I mean,
we guided about 11 to 15 points of gross margin for the going forward future. We've already shown that with a number of these customers, if you make significant price declines, they have nowhere else to go. But frankly, it's a business, as I said. Invest and grow will be global IP enterprise services. Maintain for profitability means if this can deliver 11 to 15 points of gross margin, we will continue to participate in this business, but it's not who we are.
Okay, well, that sounds very well. Let's talk, on the long-distance picture. There's about a dozen long-distance networks in the United States. Is there a saturation? I mean, how many of them can survive?
Well, I'm not sure there's that many anymore. If you think about, we've been preaching, as everyone has, consolidation for a long time. And if '05 hasn't shown us that consolidation's coming, I'm not sure, what has. There are a number of players still left. However, with the AT&T SBC merger, the MCI and X merger, I think those two long-distance networks are going to be put into businesses that, at least for the foreseeable future, there's going to be a lot of disruption, which is an opportunity for us. And pretty clearly, in my mind, focused on contiguous United States enterprise businesses. There are a number of other people in North America who are in the enterprise space or the network space, but not globally, not 500 cities, not with the kind of network we have around the world. Consolidation is happening. I think it's good for the industry, but the piece that we play in is more what Infonet and Equant played in. And if you recall what's happened, those two have gone inside BT and FT. So we were in a nice niche, and we were happy to be there.
Okay, well, as you said, consolidation is happening, and we're seeing it daily. do you guys see yourselves in a merger at some point in the near future?
Well, listen, what we announced today was a fully funded business plan that we're going to execute towards cash flow positive. There are inorganic things that we can do over time, but I would see with our financial backing, Singapore Technologies Telemedia being part of the Temasek Group, AAA rated, extremely well financed, clearly in this strategically into the long term. Carlos Slim right now owns about 19.9% of our common equity. Richard Rainwater is a good shareholder, about 14% of the common. And we're not for sale. We've got a lot of strength behind us that's strategic. But our role in the industry going forward as a consolidator, first things we've got to do is get this business profitable on its own, and then we'll keep our eyes open for things that we should do.
Okay, well, let's take a step back a little bit. There's been a lot of hype about phone service over the internet, and I've heard about it for several years now. Is it just hype, or is this going to be, there's going to be a turning point at some point?
Now, Internet protocol services are here. The hype, the VoIP piece, that piece, let me explain what's going on. We have a IP network in our core. We sell to enterprise customers converged IP services. Here's the difference. And if you have 20 locations around the world and you build a converged network, an IP VPN, on that network, voice or VoIP is a tiny bit of the traffic, but everything, and that's where the real power comes. What we're seeing in the U.S. is VoIP, or cheap consumer services at the endpoint. That's not the real promise. However, we did 2.2 billion minutes of VoIP a month, 29 billion last year, and we had a 32% increase in our overall IP traffic. We got 90 gigabits of IP traffic. We're IP at the core. We're global in IP. The game just started. It's about converged IP services that totally transform the way enterprises and governments manage their networks. Voice is just a tiny piece of noise in that converged system.
Okay, well, that's a lot to digest, and we'll see where it goes. Unfortunately, that's all the time we have right now. I'm speaking with John Legere, CEO of Global Crossing Limited. For MarketWatch in New York, I'm Tom Middleton.